Don't say we didn't warn you, right? All-time highs are very, very close to becoming a real thing. My name is Hamilton. I'm here with the Trading Initiative, and in today's Market in Focus, I'm going to show you why last week / this week have been the best 2 weeks in the market so far and what we can expect over the next 4 weeks, how we're positioning it inside of TTI, trades that we're in, trades that you can look to get into, etc. Let's go ahead and start off with this intermarket analysis. Surprise, surprise, Bitcoin up the most on the week. Again, this is a trend. Multiple weeks in a row, Bitcoin is outperforming everything else. You should be buying the motherfucking thing. It's up 4% on the week. If you don't want to own Bitcoin, you can own a Coinbase, which we're going to go through in a second, Riot, Mara, CleanSpark, a million different names to get long this name in the equities market if you don't want actual crypto exposure. But from a trading standpoint, you got to be long crypto at this point. Dumb. Look at bonds, up 3.42%. TLT, or 20 plus year. ETF bonds up again, 3.41. We nailed the bottom on this due to the bullish divergence we saw. We've been talking about this for the last 5 weeks. We're up over 100% on the second ad on that TLT play. Congratulations if anybody followed that. Look at copper. Copper's up 3%. Obviously, the market is not screaming a recession if copper is up on the week 3%. Small caps leading out of all of the major indexes. We're going to talk through this specifically, up 2.58%. Basically, what I'm trying to tell you is damn near everything has been very, very good over the last 2 weeks, specifically this week, except some weakness in mega cap tech stocks, consumer discretionary stocks, and communication stocks. We're starting to see a little bit of a pullback in those and a lot of money flood into some of the undervalued areas of the market, specifically financials, industrials, and healthcare, and other market caps, specifically smalls and mids, which we're going to look at in 1 second. So let's actually go ahead and pull it up. U.S. sectors, we're going to look at this from a year-to-date standpoint and a 3-month standpoint. Year-to-date, do you see anything funky? Excuse me, this is industries. Let's go to sectors first. Year to date, do you see anything funky here? Tech is still leading. Please don't sell your tech names. Consumer discretionary ticking up. Please don't sell your consumer discretionary names. Communication still second in charge. Don't run away from Meta. Don't run away from Google just yet. But other areas are starting to catch an inflow. You can see this on the year-to-date chart, meaning that there's been enough time to influence this much data to show you that trends are changing. So you should be looking at names like industrials right now. Look at that bounce off of the late October floor. Check out financials. Financials just hit a 3-month high. These are areas of the market that have not done well this year, but are starting to show signs of resilience. We have 2 of the largest stocks within the healthcare sector actually hitting all-time highs, Eli Lilly and UNH. Check out over the last 3 months. Look at financials about to eclipse tech. Nobody's talking about financials yet. You're about to see a trade that we have entered this week. You can take the same damn trade as us. I'm going to talk about it in about 2 seconds here. You should be looking at financials right now. You should be looking at some of the things that are starting to pop up aggressively. Industrials, right? Healthcare, right? Look at some of those underserved areas of the market. Let's go and look at industries. You can get a peel back the layers there on that sector. Right now, everybody wants to own NVIDIA. Semiconductors, we have a semiconductor name in ARM, but what's realistically the area to be buying right now? Is it semiconductors or is it software? Certainly screams like software to me on the year to date. How about internet? Internet names certainly are screaming at me to own these things too. There's a little bit of a pullback in those semi names. Software and internet, not feeling it whatsoever. Go and buy the names that are starting to outperform everything else on the 3-month chart. What's the number one thing over the last 3 months? Software. Go buy the software names. Gold miners, which we have a position in. If you've been following our content, we've been in AGI for a while. That trade is up and over 100% right now. We're also long gold, which is up and over 100% right now. GDX, third best performing industry group. Gold miners, who would have expected that? Not me. Semis are all the way down here, outperforming SPY, so it's not sell all the semis, but right now, from an investing / trading standpoint, is it time to be buying semis? Let's go for the things that are outperforming, right? So we're looking at different sectors and industry groups than we were just a few weeks ago, but in a very, very bullish environment. I'll show you. Let's peel back the layers a little bit more. I'm going to give you guys a little hint here. If you can see trend changes on the year-to-date chart, boys, it's time to start taking action. Year-to-date, we're starting to see large cap growth wane in strength a little bit. That doesn't mean it's going down. It's just not going up as fast as some of the other areas of the market. Large cap value, look at smalls and mids. Smalls and mids on the 3-month, you can really start to see it. Last 3 months, large cap value is now outperforming SPY in terms of, outperforming large cap growth in terms of SPY. Guys, I'm giving you the keys right now. Go find the trades that fulfill these types of market caps, these types of areas of the market. It's not just buy Tesla and wait. That's not what the market right now is giving you. Talking about smalls and mid caps, I'm going to show you a little sneak peek here. This is during our monthly charting session yesterday, but I want to show you guys something really quick. There's something called the January effect, and lo and behold, the January effect is all about smalls and mids catching a bid at the beginning of December and running through the end of January. What is going on right now with small caps? Have you been noticing? We're up like 13% over the last few weeks, and we just broke up and over the 200-day high. Right now, as I'm recording this, it's up like almost 3% on the day. Guys, January effect. That's not to say sell your large and mega caps, but it is to say if you have a couple extra bucks laying around, maybe this is not the worst time to be going and buying some small mid caps. Going back to the 1950s, this is a historical trend. At the beginning of December, small caps tend to outperform large caps. Stats right here. Look at it. You don't got to believe me, but you're certainly going to after it happens. And then you're going to say, I wish I would have listened to what Hamilton was saying. I really do wish. And today's Twitter of the day, we're going to talk about this asshat Dario, absolute idiot, posting all of the conspiracy theories and videos, a scam, all of this shit. UBS apparently sending an email saying we don't have liquidity to pay out depositors, spreading all of this FUD this week about UBS is going to be the next major banking crisis and it's going to cause the world to end, specifically within the financial sector. Oh my God, we are about to see the end of the world. I don't know if Darius, what's his name? Dario. Whatever the fuck his name is. I don't know if you looked at it, but UBS is at a 15-year high today. 15-year high. So for a market that's afraid for liquidity issues, Dario, you're a fucking idiot. And as a matter of fact, we have a position in UBS. We bought it all the way back on the original resistance turn support flip. We've been sitting in this for 5 months. We still have time in the contracts. They're currently up 140%. 140% right now. So once again, don't follow the dum-dums that are on Twitter screaming that the world is going to friggin' end, because it's not going to end, guys. And more often than not, when you get these types of people that are screaming at stuff that really have no correlation to the market whatsoever. This was from earlier today, 1:30. Guys, don't listen to this type of shit. It's total garbage. Unless there's a chart and a price attached to it, whatever the fuck they're saying, just don't even listen to it, okay? Let's go back to TradingView really quick and let's talk through some of this stuff because there's some trades to be taken, guys. First things first, let's look at the Dow. Look at the Dow. It's the most important index, whether you want to admit it or not. This is 2-year highs in the Dow, guys. 2-year highs in the Dow. Let's bring it into the daily. You can see exactly what I'm talking about. We are almost at all-time highs. This is all-time highs, guys, right here. We are less than 2% away from all-time highs and arguably the most important index in the goddamn market. This is majority financials, healthcare, industrials, tech. This is a greater, broader look of the market here. SPY, even though it has some diversification, is still major tech at 20 to 25%. The Qs, obviously, very little diversification outside of tech, consumer discretionary, and comms. Guess what? The largest sector in the Dow Jones Industrial is financials. And what is hitting 3-month high? Financials. We are less than 2% away from an all-time high in a index that is not dominated by tech. What is that telling you? Maybe it's time to go buy some things that aren't tech related. Having said that, though, the Q is stalling out slightly. We expect this thing to be at all-time highs or very close by the end of the year. It just feels that way. We are currently about 3% away from all-time highs. No reason to sell your stuff, especially if you caught the moves with us. You should be in free trades or up huge, since we were buying literally down at the almost bottom down here. We were buying in the first week of November. We caught the friggin' bottom. If you grab those entries with us, don't be quick to sell to chase the next shiny object. These things may slow down and consolidate for a little bit, but we expect a resumption of the uptrend, specifically in the Qs. Speaking of the Qs and tech, why don't we look at the tech sector really quick? All-time highs. All-time highs in the tech sector. Don't sell your good positions early. Don't be shaken out. This is incredible. We expect this thing to continue to move up. It might take a little bit, but it's going there. Semiconductors taking a little bit of a break as well. I asked a question yesterday within our group. Is this a top or a pullback? I tend to think it's a pullback. We're at all-time highs in semiconductors, all-time highs in tech. Money is flowing throughout the market right now, permeating in potentially some of the more undervalued areas. That doesn't mean the market leaders are going to stop going up. It might just be a little respite here as the market kind of distribute some of those profits that they got over the last 4 to 6 weeks before the resumption of the uptrend. You can't hate tech and semis at all-time highs. Otherwise, you must like when your wife steps on your cubes. That's it. That's what I'm going to say. KRE, regional banks. This is a part of the market that's probably going to pop if small caps pop. Small caps are popping. We're about to see that in a second. This is the single largest industry group within IWM, your Russell 2000. Why would you not expect this to pop? We're up and over the 200-day moving average. We're very close to hitting new 6 to 8 month highs. I don't know how long that is. It looks like 6 to 8 months. Regional banks, regional banks, regional banks. Speaking of regional banks, here's one you can steal from us. We bought off the 12.5 pivot. We're getting it today. There you go. We want to buy the 12.5 pivot. We're targeting $15 on this gap fill. Stop out somewhere below the 200-day moving average around $11.50. We grabbed the $15 calls in March or shares if you're a shares trader. Does it get any easier than this? It's an island reversal fractal. RSI is in a bullish momentum regime and screaming to the upside, a massive 3.09, which although it's not huge in the grand scheme of things, it's really a lot. This is a volatile name for a regional bank, so that's great. And the gap in volume shows us there's going to be very little resistance through this gap because, duh, it's a gap. This is a fantastic trading opportunity for you if it fills that small mid-cap function as well, right? CrowdStrike, our home run, our Grand Slam webinar next Thursday on exactly how we found this trade, took it, and held it to a 600% plus win. We still have contracts in this thing. Absolute rock star of a tech name. Really emphasizes don't sell early, don't sell early, don't sell early. If you have time on those contracts or you're in shares and you catch these moves, there's no reason to chase the next best thing. I'm telling you, last one that we are in currently is Coin. We bought it off the 110 pivot. This is our third trade in Coin this year. All three have been winners. We're very lucky in that regard, but we bought it off of the 110. We came down, consolidated slightly over a day or two, and we're right back up into new highs. All three of these perfect examples of the TTI trading system, and that key play is something that you could steal straight from us. Steal it. Take it. If you don't like key in particular, go find names within KRE that are popping off right now out of that island reversal fractal. There are plenty of them. You can also go into financials and look at some of the mid, large, and mega cap stocks, mainly JP Morgan, right? Guys, the name of the game is bulls are in charge. That's what the theme was last week when I posted the market in focus. That's the theme going forward for the next 4 to 8 weeks. We expect the market to be incredibly bullish. It doesn't mean we're going to go straight up. But guess what? Come back and talk shit to me in 4 weeks if we're down, okay? Hope you guys enjoyed your week. I hope you guys made a lot of money, and I'll catch you in the next one.